Level 1. Analyst. It's 9 p.m. The office is mostly empty. You are not. Your laptop has 15 tabs open. Crunchbase, PitchBook, a founder's LinkedIn, a market map that took you 4 days to build. Nobody asked you to build it. You built it because you thought it would impress someone. It will not impress anyone. Your job is to find companies before anyone else does. You send cold messages to founders at 10 p.m. You attend every demo day. You log every conversation into a CRM that the partners glance at once a month. You write the first draft of every investment memo. You pull the market size numbers. You build the financial model. You write the risk section. You write the recommendation. Then a partner rewrites it over a weekend and presents it Monday morning. He does not mention your name. You sit outside the partner meeting room. You hear the decision happen through the glass. You find out the outcome in a Slack message 40 minutes later. You are not invisible because you are bad at this. You are invisible because that is the job. You are doing the work that makes everyone above you look smart. You tell yourself this is temporary. You are right, but temporary is longer than you think. Level 2. Associate. You are in the room now. That is new. You sit at the far end of the conference table with a notepad and a list of questions you are not going to ask. A founder is pitching. The partners are leaning back. You are watching all of it. The founder's hands, the way the deck skips over the competitive slide, the moment one partner glances at his phone. You see everything. You say nothing. Your job now has real weight. You take the first founder calls. You decide who gets a second meeting and who gets a polite email. That is power, even if it is small and quiet. You run the due diligence. You coordinate the lawyers, the technical reviewers, the reference calls. You own the deal memo end to end. You write the model. You write the recommendation. You know this company better than anyone at the firm. The partner edits your memo in tracked changes. He adjusts the formatting. He moves 2 sentences. He approves it and sends it to the partnership under his name. The founder thanks you personally after the term sheet is signed. He means it. The partner is already on his phone. You are building real relationships at this firm. You are building them for someone else's portfolio. Level 3. Principal. You are having coffee with a founder. She is sharp. She has options. 3 other firms want this deal. You are pitching her as much as she is pitching you. You hand her your card. She looks at it. Principal. She smiles and asks if a partner will be at the next meeting. You own deals now. You source them, develop them, and bring them to the partnership yourself. When you walk into a partner meeting with a company you have spent 6 weeks on, you are not supporting someone else's conviction. You are building your own. That is the job now. You sit on boards as an observer, not a member. An observer. Same room. Different chair. You have real relationships with founders who call you first, not the GP. The firm has an unspoken clock. 2 years at this level, maybe 3. Make partner or move on. Nobody puts it in writing. Nobody has to. You watch a colleague leave for a portfolio company and tell everyone it was her choice. You nod. You understand. You have 2 years to turn your conviction into a track record. The partners are watching every move. You are always auditioning, and the judges never show you the scores. Level 4. Vice President. The board meeting starts in 10 minutes. You are in the observer seat, not the board seat. The partner holds the vote. You hold the notes. The CEO just told the room that the CFO resigned last week, and the runway is 6 months. The room goes quiet. The partner looks at you. You already know the options. You have been living inside this company's numbers for 4 months. You run the process. You model the bridge round. You coordinate the legal team. You manage the relationship between the firm and the founder at 11 p.m. when he calls in a panic. You are the one who actually knows what is happening inside every portfolio company. The partners know the headlines. You know the details. The carry agreement you don't have yet is the detail that matters most. You are a highly paid employee in a building full of people building generational wealth. The fund will return 4 times invested capital. The GPs split $80 million in carry. You receive a performance bonus and a handshake. You know this portfolio better than anyone alive. None of it belongs to you. You start thinking about what it would take to go somewhere that would make you a partner. You start thinking about it seriously. Level 5. Partner. Your name is on the term sheet, not second. Not in the acknowledgments. First, your signature, your conviction, your carry on the line. The first one that is actually yours. You are in the partner meeting now as a full participant. You present your deal. You make the case. You field the questions. A senior GP pushes back on the market size. Another flags a founder reference that concerned him. You have answers for both. You have been doing this for 8 years. You know when a concern is real and when it is noise. You vote yes. 2 senior partners vote no. The deal dies. You have carry now. Real economics. If your deals work, the math is life-changing. There is a catch. Carry is paid on fund cycles. A fund takes 10 years to fully return. Your first meaningful check is a decade away. If your deals underperform, you are reevaluated every fund. Partners get recycled too. The language is polite when it happens. The meaning is not. You have a portfolio company burning cash faster than projected. The board meeting is in 2 weeks. You booked the flight this morning. You are finally doing the job. The job is harder than it looked from the outside. Level 6. General partner. The CEO finishes her sentence and the room turns to you, not to the other partners. To you. You have been in venture for 12 years. You have a board seat at 11 companies. When you speak, the room takes notes. You write the checks. You set the terms. You own the outcome. 3 portfolio companies are performing. 2 are dead. 15 are alive and running towards something, though you are not yet sure what. The fund is 4 years old. You have 6 years left to find out what kind of investor you are. Every decision you have made in this fund is still being graded. The grade is not final, but it is being recorded. Your judgment is the product. There is nowhere to hide a bad bet. The investment you passed on last year is now worth $800 million. That story has been written about twice. Your name is in both articles. You wire $15 million into a company on a Tuesday afternoon. You will not know if that was right for 7 years. That is the job. You have chosen a profession where the feedback loop is measured in decades, and the results are public. You drive home. You do it again tomorrow. Level 7. Managing partner. 60 institutional investors are in this room. Pension funds, endowments, family offices. The slide behind you shows the fund's performance. DPI, TVPI, IRR. Every number is being read by people who manage billions of dollars and have seen every kind of manager story before yours. You hold the clicker. You start talking. You are not an investor anymore. Not primarily. You are running an institution. The product is the fund. The customers are in this room. Your job is to make them believe in the next fund before this one is fully returned. You manage the GPs now, their carry disputes, their deal conflicts, their desire to leave and raise their own fund with the brand you built. The best investor at your firm sourced a deal last year that is tracking toward a 10 times return. He is getting his own press, his own inbound from founders. You congratulate him at every opportunity. You are already working on his retention package. An LP pulls you aside after the session. She is reducing her commitment to the next fund by half. You thank her for telling you personally. You go back to the hotel room and rebuild the model. The fund closes anyway. It is bigger than the last one. You are further from the work that made you than you have ever been. Level 8, Founding Partner. The conference room down the hall has your name on the door, not a nameplate. Engraved. The firm has been running for 22 years. You raised the first fund from 12 people who believed in you personally. There was no track record. There was only your conviction and their trust. That was the whole thing. A junior partner is presenting a deal in that conference room right now. The sector is one you do not fully understand yet. The founder is 26. The market is moving in a direction you did not predict. The junior partner's pattern recognition on this is better than yours. You know this. You sit in the back and listen. A founder asks if you will be on the board for her new company. You recommend the junior partner instead. It is the right call. She is better suited for the stage and the sector. The founder thanks you. The junior partner thanks you. You walk back to your office and sit with what it cost you to do the right thing. You built something real. The firm, the brand, a portfolio of companies that change things. The proof is on the shelf behind you. A framed seed check. A product prototype from a company that went public. A photo from an IPO where the founder is crying and you are standing next to her trying to look calm. The thing you built has outgrown you. That is the proof it worked. That is also the whole trap. Level 9. The limited partner. Nobody in this room has ever met a founder. The table is long. The light is institutional. 6 people with an investment committee mandate and $50 billion in assets under management are reviewing a manager presentation. The firm asking for capital has a 20-year track record. 3 partners flew in for this meeting. They are prepared. They are nervous. You are not nervous. You are the water that everything drinks from. You do not pick startups. You pick the people who pick startups. Your due diligence is on the fund, not the companies inside it. You study manager tenure, carry structure, portfolio construction, DPI on realized investments. You are the investor's investor. When you sign a capital commitment letter, a GP calls her co-founder and says, "The fund is closed." Somewhere, a champagne bottle opens. You are already reading the next manager deck. No founder has ever called you at midnight. No board has ever turned to you in a crisis. Your name is not on a single cap table. The returns flow back to the pension that funds retirements, to the endowment that funds scholarships, to the family office compounding across generations. You funded the fund that funded the seed round that kept a company alive in month 4. That company changed something. You have never met the person who built it. You never will. You are the most powerful person in this entire system. You are also the furthest from the only part of it that ever felt like anything. The clicker. The cold message at 10 p.m. The term sheet with your name on it. The founder crying at the IPO. Someone else lived all of that. You signed the letter that made it possible. That is your legacy. Total, invisible, and completely untouchable.